Now, new mortgage rules come into force at midnight, aimed at ensuring borrowers are not offered loans they can't afford. Home buyers have been warned to expect more scrutiny and a greater chance of rejection under the Mortgage Market Review. It's aimed to crack down on loose boom time lending. Will it? Andy Veritas here. Will it actually make it harder to borrow, Andy?
Well, what's crucial, Emily, to remember here is that some lenders have been doing this for years already. It's just that from tomorrow they'll be required to do it. If they don't show they're doing it, they'll get in trouble with the regulator. So what is that experience of them asking you about your grocery bill, your gas bill, how much you spend on grooming? What does that show us about whether it constrains lending or not? Now, if you look at the amounts people are borrowing, far from making us borrow less, that affordability test has allowed us to borrow more. So go back to the 1980s. Under the old system, for the maximum amount you could borrow 2.5 times your joint income. So if you had a couple with a joint income of 150 grand, lucky couple, they could borrow 375 grand. Now, under the new system, I've got some quotes today, and Halifax will lend you 675 grand, 4.5 times your income. Skipton, 750 grand, 5 times your income. And you can go up to an even higher amount. Newcastle will lend you 862 grand, which is 5.5 times your income. So finding out what you spend on your haircut or your gas bill might actually mean they lend you more.
Will it actually get harder for a first-time buyer to stretch that extra bit to buy a really expensive property?
Again, not necessarily. What people used to do in the past, if they couldn't quite afford the monthly payment, they'd ask you to give them an interest-only mortgage. But these days, those are harder to get. So what they're doing instead is stretching the mortgage over a much longer term. So that can really cut your payments. In the past, over 25 years, for example, borrowing £500,000, you paid £2,900. If you stretch it out to 35 years, you can cut your monthly payment to just over 2.5 grand. So actually, it can make it cheaper, but the mortgages are getting longer and longer and stretching into retirement. You might be paying them till you're 75.
That's interesting. And if you take first-time buyers versus buy-to-let, different treatment for them?
Yes, completely different, because if you're buying for your own home, it's a regulated mortgage. If it's a buy-to-let mortgage, it's not regulated, so they don't need to know about your gas bill or your grooming. So they have an advantage, and it means for the same monthly payment they can borrow more. Therefore, buy-to-let investors can compete better for the houses on the market.
Andy Veritas, thanks very much. Thank you.